Vanguard has a new product called Vanguard Kids. In today's video, let's firstly look at what does it offer and how does it work. Then we dive into its structure and tax issues we need to consider before we open an account with them. A Vanguard Personal Investor Kids account allows you to invest on behalf of a child under 18. By opening a kids account, you can invest the funds into one of the 4 ready-made managed funds, from conservative to balanced, from growth to high growth, which many of you probably already know. And each investment option consists of different types of managed funds across defensive and growth assets, from 70-30 defensive to growth to 10-90 defensive to growth assets. There are 2 ways that you can invest with a kids account: auto invest and one-off contribution. When you set up the kids account, you have the option to set up the auto invest plan, which includes the amount and frequency of the direct debit investment as well as the start date. And you can invest as little as $25 per period for your kids. When you set up the kids account, a Vanguard cash account will be automatically generated as a hub to receive funds to invest. So far, direct debit from your linked Australian bank account under the adult's name is available. BPay and electronic funds through VSB and account numbers will be available soon. Vanguard Kids account follows the same fees and costs of Vanguard Personal Investor, which is no account keeping fee for Vanguard managed funds. And since the kids accounts can only invest Vanguard managed funds, so there's no account fees or brokerage fees applied to this account. To open Personal Investor Kids account, the adult need to have an existing eligible Vanguard Personal Investor account, which can be either individual, joint, trust, or company account. If your existing Vanguard Personal Investor account is an self-managed super fund account, you will need to open a new Vanguard Personal Investor account from the mentioned 4 types to be able to open a kids account. The child will need to be Australian tax resident under 18 years old, and you can open additional Vanguard Personal Investor Kids account for multiple children. Any adult can set up a Vanguard Personal Investor Kids account on behalf of a child. Now, let's talk about the ownership structure of Australian children owning investments. In Australia, children under 18 years old on the last day of the financial year are considered minors, and minors are generally taxed at high penalty rates on any income generated from the investments, such as interest, rent, and dividends. And this is the way, from the government's point of view, to prevent wealthy parents from using their kids' accounts as a tax shelter. If we talk about investments in general, investment property, shares, managed funds, ETFs, and saving accounts, minors can directly own some types of the investments, such as investment properties or saving accounts. The income generated from those investments would attract a higher penalty tax rate. However, minors cannot buy shares directly themselves due to their lacking of legal capacity. I made a video before and shared the pros and cons of different ways to invest for children when I was looking to invest for my kids. In terms of investing in shares, there are 4 major ways, and you can invest on behalf of your minor as a trustee under an informal trust structure, or you can hold the assets solely under one of the parents' name and give it to your kid when they turn 18 through an off-the-market transfer, or you can set up a formal family trust, or you can invest in a product called investment bond. Different investment options have their own income tax and capital gain tax treatment. So what is the ownership structure of Vanguard Personal Investor Kids account? Based on Vanguard, this is an informal trust structure that an adult acting as trustee for the child as beneficiary. As the adult holds the assets for the kids' benefits, any income produced will be taxed at the adult's own marginal tax rate as long as you have provided your TFN. If no tax file number quoted, pay-as-you-go tax will be withheld at 47% from the unfranked amount of the dividend income. So it's best to quote your TFN and set up the kids account under the parent with the lower taxable income. So what happens when the kid turns 18 years old? Under this informal trust structure, when the child turns 18, they're able to open a Vanguard Personal Investor account. The adult can initiate the transfer of the managed fund holdings to the adult kid's Vanguard Personal Investor account. As long as you've been managing the holdings on the sole purpose of the kids' benefits and not trading the funds as your own money, the ownership transfer shouldn't trigger a capital gain tax event, as the beneficial ownership has always been the kid, so it hasn't changed at all. However, the child will inherit the original cost base, so comparing with owning shares solely under the parent's name and triggering the capital gain tax when gifting it to the adult kid when they turn 18, this informal trust structure, the tax treatment looks almost the same. One thing that I want to bring your attention is that there's a difference between investing directly and investing through Vanguard Personal Investor. For any managed funds that you hold, Vanguard is the custodian of your holdings on your behalf. So Vanguard retains legal ownership of your assets and the investor retains beneficial ownership. For ETFs and direct shares, JP Morgan has been appointed as the sub-custodian of your holdings and they are the legal owners subject to Vanguard's direction. So that means if you open a kids account, your kid will be the sub-beneficial owner of the holdings that Vanguard legally own. Do I worry about Vanguard go under? Not really, but the complex structure kind of put me off by thinking the tax treatment will be more or less the same if I own assets directly under my name and give it to them when they turn 18. However, if you would like to make a separate account for your kids or grandkids, instead of mixing the investments that you invest for them with your own, which I'm sure that you would have your spreadsheets to clarify on the side, Vanguard Kids account is not a bad option, especially with its super low fees. So, how do you think of Vanguard Kids account? Would you give Vanguard Kids account a try? My name's Irene. I'll see you next time. Bye.